The American dollar has ruled the world's financial system for over 75 years. Today, that reign faces its greatest threat. 5 powerful nations, Brazil, Russia, India, China, and South Africa, have launched a bold plan to end America's financial dominance. Their success wouldn't just alter the global balance of power, it would ripple through the economy, reshaping trade routes, destabilizing markets, and rewriting the rules of international finance. The value of every dollar in your savings account and even the price you pay for daily essentials could be on the line. Think of the dollar as the world's financial operating system. It runs everything. When countries trade oil, they use dollars. When central banks save money, they hold dollars. When international businesses make deals, they count in dollars. This default setting has cemented the dollar's role as the backbone of global commerce, ensuring America wields unparalleled financial influence. By controlling the dollar, America controls how money moves around the world, granting it the power to shape economies, enforce policies, and even wage economic warfare without firing a single shot. But that power is now under direct attack. Russia, hit hard by American sanctions, has created its own payment system to bypass U.S. control. This system, called SPFS, was initially dismissed as a minor inconvenience to the global dollar network. But today, it's a lifeline for sanctioned nations seeking financial autonomy. China has convinced countries across Asia and Africa to trade in its currency, the yuan, instead of dollars. Even traditional U.S. allies like Saudi Arabia now consider joining this financial rebellion. These moves signal not just frustration with the dollar system but a deliberate effort to dismantle it. The numbers reveal a startling shift. Central banks worldwide have reduced their dollar holdings to the lowest level in 25 years. China and Russia have nearly doubled their gold reserves since 2015. These gold reserves aren't just shiny treasures, they represent a hedge against dollar volatility and a bid to rebuild trust in non-dollar assets. Brazil and India now conduct major trade deals in their own currencies, completely avoiding the dollar. Each of these moves, while seemingly small, chips away at the once unshakable foundation of dollar supremacy. This isn't just about money, it's about power. When America wants to punish another country, it cuts them off from the dollar system. This worked like a financial death sentence for decades. Yet, the dollar's weaponization has also become its Achilles heel. The more the U.S. uses financial sanctions, the more countries seek escape routes. Now, countries have found ways to survive and even thrive outside America's financial control. Look at what happened with Russia. After being cut off from the Western banking system, Russia didn't collapse. Instead, it built its own financial highways. Its SPFS payment system now handles billions in international trades. What seemed like an act of defiance evolved into a blueprint for financial independence. Iran, Venezuela, and even some European companies used this system to avoid American oversight. What was meant to cripple Russia actually forced it to create alternatives to dollar dominance. This shift is teaching other nations a valuable lesson. Financial survival is possible without the dollar. China's strategy proves even more ambitious. Through its Belt and Road Initiative, China has convinced over 140 countries to increase trade in yuan. This isn't just diplomacy, it's financial strategy. By embedding the yuan into infrastructure projects, China ensures its currency becomes a permanent fixture in global trade. When these nations build ports, railways, or power plants with Chinese help, they often agree to use yuan instead of dollars. Each deal chips away at America's financial power. The BRICS alliance isn't stopping there. Their new development bank has already funded projects worth over $33 billion across 3 continents. This bank challenges institutions like the IMF and World Bank, offering loans without the strings of Western-style policy changes. For many nations, this freedom is irresistible. Unlike American-controlled institutions like the World Bank, this bank doesn't demand that countries change their policies to get loans. By removing these conditions, BRICS is offering what many see as a more just and equal financial system. Gold plays a crucial role in this power shift. BRICS nations now hold more gold than the United States and European Union combined. Russia and China add to their gold reserves every month. This strategic accumulation signals a preparation for a post-dollar world, where gold could once again anchor the global financial system. This isn't just about collecting precious metal. It's about creating a financial foundation that doesn't depend on American dollars. For older Americans who remember the dollar's unchallenged power, these changes might seem unthinkable. But consider how trade has already transformed. 20 years ago, 80% of international trade used dollars. Today that number has fallen below 60%. The erosion of dollar dominance is no longer theoretical, it's happening in real time. The technology revolution speeds up this change. China has already tested digital versions of its currency that could replace dollars in international trade. India's digital payment system handles more transactions than America's. These systems bypass traditional banking infrastructure, allowing countries to trade without ever touching dollars. Russia and China have connected their banking systems in ways that completely bypass Western controls. Former President Trump recognizes these dangers. His threat to impose 100% tariffs on countries moving away from the dollar shows how seriously America takes this challenge. Yet such threats often do more harm than good, pushing allies and rivals alike into the arms of alternatives. Each time America tries to punish countries through financial sanctions, it pushes more nations to join the BRICS alternative system. Saudi Arabia's actions reveal how much has changed. For 50 years, Saudi Arabia sold its oil only in dollars, forcing other countries to keep dollars if they wanted energy. Now Saudi Arabia accepts yuan for oil sales to China and considers joining BRICS. This seismic shift undermines the petrodollar system, a cornerstone of dollar dominance since the 1970s. The impact reaches far beyond international trade. When countries stop using dollars, they also stop buying U.S. government debt. This creates a double-edged sword. Less foreign demand for U.S. bonds could raise borrowing costs domestically, straining the federal budget. This could force America to pay higher interest rates, affecting everything from mortgage costs to retirement savings. Your pension fund's value, your savings account's purchasing power, all could change as dollar dominance fades. Even America's closest allies seek protection from dollar dependence. The European Union now encourages companies to trade in euros instead of dollars. Japan and South Korea have currency swap agreements with China. Britain allows Chinese banks to clear yuan trades in London. These actions demonstrate a growing consensus. The era of the unchallenged dollar is over. BRICS nations have also created their own rating agency to challenge American control over financial risk assessment. This new institution could reshape global capital flows, allowing countries to secure investment without relying on Western approval. This might sound technical, but it means BRICS countries can now decide for themselves which investments are safe, without depending on American rating agencies' opinions. The future likely holds a very different financial world. Instead of one dominant currency, we might see several major currencies sharing power. This multipolar system could reduce the financial risks of relying on a single currency, but it also introduces new complexities. Your grandchildren might use digital yuan to buy foreign products, hold European euros for savings, and see gold regain its historical role as a store of value. For America, this change brings both challenges and opportunities. The loss of dollar dominance would reduce American global power, but might also force needed economic reforms. The cost of imports could rise, but American exports might become more competitive. A weaker dollar could also encourage domestic manufacturing, potentially revitalizing certain sectors of the economy. Your retirement savings might need to diversify into multiple currencies to stay secure. The signs of change appear everywhere. BRICS nations now handle over 40% of global trade. Their combined economic power exceeds the G7 countries. More nations apply to join BRICS every year, attracted by the promise of freedom from dollar dominance. This isn't just a financial shift, it's a fundamental reordering of the world's economic hierarchy. American leaders face difficult choices. Fighting to maintain dollar dominance through sanctions and threats pushes more countries toward BRICS alternatives. Accepting the change might mean a smoother transition but reduced American power. One thing is certain, the era of unquestioned dollar dominance is drawing to a close, and the decisions made today will shape the global economy for generations.